Anyway, I want to edit that. These ones I already tried and they work.
Good.
Okay. It's good, right?
Looks good to me.
Yeah, I think so.
It's your podcast. You tell me if it looks good.
And you can move the chair however you want.
Yeah.
Higher, smaller, whatever. Okay, some more cables. Okay, ready?
Sure.
Welcome to another episode of Empowered. My name is Luis Carlos Estrada, and today I have a very special guest, Michael. Welcome.
Thank you. Thanks for having me.
Yeah, how are you doing today?
Loving the rain out there. It's beautiful.
That's cool. So, for people who are listening, we just met probably a month ago or 3 weeks ago, and we were working on a project in one of my classes directly with your company. Right. You're the CEO and founder of Mother Road Brewing Company.
Correct.
So first of all, before moving into this specific topic related to business, I want to ask you about your background for people who don't know you.
My background, I'm actually a graduate here of NAU.
Mm-hmm.
Graduated in 2001, started in 92, so some of us take a little longer to get through the process, right?
Yeah.
Hotel restaurant management, so that is my passion, and my background is food and beverage from the time I was 15.
Okay.
Whether it was catering, cooking, I love the whole service aspect of hospitality. So I of course graduated from here and then promptly bought a real estate appraisal business.
Okay.
And learned the art of appraisal, which was a little different than one might normally do, but it was great because it allowed me to have a fair amount of technical writing.
Mm-hmm.
It allowed me to really get into analysis of data, learn the writing, learn what later it ended up bankers wanted for me,
mm-hmm.
so we could get a loan on the company. But while I was doing appraisal, my soul was dying, and I was doing a little bit of homebrew at home,
mm-hmm.
With the kids and things, and that slowly turned into the what became Mother Road Brewing. So really, I started out stereotypically. I was a home brewer.
Okay.
I mean, it doesn't get any more cliche than that, of home brewer that starts on the kitchen stove, goes into the garage, and then eventually builds a brewery, right?
Yeah. And how did your journey as an entrepreneur start? Were you always passionate about entrepreneurship, or it was just happening by accident? I don't know.
Okay, no, that's a good question, because so we're coming out of COVID, right? And,
yeah.
So Mother Road, the people I surrounded myself with were other entrepreneurs, and people that were just like, no, we're not going to fail. We're not going to let some microscopic thing we can't even see take out what we've built. And we started questioning, why were we all entrepreneurs? Why did we do this? And for me, it's because my grandfather was a civil engineer. He had his own firm. There's still, the Marquess name is still on the building in Oregon. My mom went into business for herself as a CPA. My uncle did a bunch of businesses and investments on his own. So to me, it was very natural to see that family members just start businesses. Mm-hmm. And so for me to, I did work in the corporate world for a little bit, but it was always, I guess I just always thought I'd start a business. And I think that's something that's missing with a lot of younger people coming out of college, is a lot of times the college education pushes you to go work for corporate America, go work for someone else, mm-hmm. which is good. You'll get a great education, but not as much on the entrepreneurship. It's not, if you don't see it, it may not be a natural choice for you.
Okay. And did you always like this, or were there any point where you were like, I'm not sure if I should be an entrepreneur, probably I have more safety if I work for an actual company? How was that process for you?
I mean, do you really have safety working for a big company? I mean, we're going into a recession probably. There's mm-hmm. inflation, there's going to be cost cutting.
Yeah.
I mean, is it really any different? I mean, I think it's safer to be an entrepreneur. At least you have a modicum of control that you can use on yourself and your crew and what your company does. So I'd say it's almost safer to be an entrepreneur. Yes, there's lots of risk, and you could probably go be happy and work for a Fortune 500. But no, I've always wanted to be in charge of my own company.
And when did the idea of founding Mother Road Brewing Company start in your mind?
It really came out. My co-founder Alyssa, she and I were on a trip coming back from Colorado.
Okay.
Driving out past Cayenne to that long dark stretch, and she really had a heart-to-heart with me. I was doing the appraisal business. It wasn't making me happy, obviously. It was, appraisers are not collaborative by nature. They tend to be very cutthroat in their business practices. So it wasn't a terribly fun business. And I was just losing part of my soul by not being in food and beverage. And so the boys fell asleep in the back seat and we're driving. And she really had a heart-to-heart, said, why are we doing this? Why aren't we living our best lives? If you see like the Nate Avery best life ever, I mean, that wasn't a thing yet, of course. But we had seen our grandparents come out of depression. Her grandmother fled on one of the last children's boats out of Austria during World War II. And they always enjoyed life, and we weren't enjoying life. So really it came down to us deciding that we wanted to do something that made us happy. And that was kind of the beginning of the brewery, right there and then on that trip. Granted, it took a little longer to wind up the appraisal firm and start writing business plans and things, but the last day in July of 2010, I was an appraiser, and the next morning, August 1st, I started writing the business plan. And I said, okay, I'm a brewer now. And
nice.
That's as simple as it was, right?
Yeah.
I mean, and I'm a terrible brewer. My home brew, I'd have one good home brew and two others. That's why we have a whole team of brilliant brewers now that brew better than I ever could in those early days. We have labs, we have sensory panels. It's a whole different animal now.
And how did everything start? Because you mentioned like from the night to the following morning, you started like writing the business plan. Do you have any idea about how big your company was going to become when you were just starting?
No, we had no clue. I mean, the initial thoughts were we wanted to be a production packaging brewery. So, because there's brewers in town that are like brew pubs and things, and they're restaurants. And for me, we always wanted to brew and distribute. So we always set up that we were going to get a little bigger. Did I know we would be the number 3 brewery right now? No, I had no clue. Did I know that we'd be at 154 in the nation out of 9,000? No clue. And that is really the hard work of my co-founder at the beginning. I mean, between her rearing our 3 kids at home, me working the long hours, bouncing ideas off each other, we really did in those early days form what became the modern Mother Road. And then it went through probably 4 or 5 years ago, we started transforming again. And then really we've hit kind of the modern era in the last 2 to 3 years as we've hit new production strides and really changed up how we do business. But it's so funny you asked that because, I mean, do you ever know? I mean, I got up this morning, had coffee on the patio, it was sunny. Did I know it was going to rain today?
Probably not, right?
I didn't. You hope for a good day and you go for it, right?
When you were writing the business plan at the beginning, what were some of the most important things that you included that play an important role within the growth of the company? Trick
question. Because I had 2 audiences for that business plan.
Okay.
So the first audience was the banker. So that was a very technically focused SWOT analysis. All of those traditional things that go into a business plan. That was the important part. And if you ever want to laugh, I'll show you the original. It might be version 2. I think I can't find the original anymore. 11 years on, but the first audience had to be very sanitary, very technical. This is what we're doing. This is why we think it's going to work. Here are the numbers. Here's our assumptions. And all of that was driven very much by the appraisal background.
Okay.
Because that's technical writing. That's nothing sexy. It's nothing exciting. The second business plan, which had all of that same technical data, then had a lot more of the fun things for the investors.
Okay.
Because when you're attracting investors in the early days, they really want to get a feel for who you are and the company. And I didn't know that. I didn't know that at first. I got lucky that I put in some humor, some beer quotes, and then I really fleshed out the technical side. These are what our labels are going to look like. They're going to be heavily influenced by the Works Progress Administration. This is what kind of beers we're going to do. These are some of our recipes. This is what you expect to find in the tap room. And we built that because that brought the feel for the investors, so they knew basically what they were going to get into for a company, what I would call culture now, but that was that beginnings of that. And that allowed then the investors, which were the money that came in after the initial bank loan to get construction and equipment, those investors were the operating capital for the first several years.
Okay. Did you have like enough capital to invest when you started, or it was like a completely different process, like trying to find investors?
Okay, here's the number one lesson I'm going to give you.
Okay.
You never have enough money.
Yeah.
And everything takes twice as long.
Okay.
So no, I swear we laugh about this. We never have enough capital. The counterpoint to that, though, is by not having capital, you get very resourceful and you get very creative with how you do things, which can be a strength of a company. I've seen breweries. Well, we just watched Modern Times out in San Diego implode because I think they had a ton of money at the beginning with investors from family, friends, and stock and bonds and loans. Great way to build a company fast, but if you're not being really resourceful, the second things get tough, you don't have a fallback. I mean, right now, it's getting tough. There's inflation, there's increased costs. Our crew is knowing how to go back and do things like we did when we were dirt broke in the early days, right? It just makes you a better steward of the company money and your shareholders and your employees' trust.
So basically you started with what you had, right?
Yeah, and then we just kept, so we had, the original loan was $50,000 from my grandmother at 7% in 2010, and that was the loan that allowed for me to stop working as an appraiser for a couple months and get the original startup. So get a lease signed, start writing, still have groceries, those things, right? Then we went to an SBA loan, which the Small Business Administration, they're so difficult to work with sometimes because they want everything and then some more, and they're very bureaucratic, but they have great loans for people that can't get a loan anywhere else.
Okay.
So they're kind of I joke that they're the lender of last resort, but they come through for you and they've made our brewery possible. Okay. So we had a loan with them, and then we started doing under the small investors, what is it? I'm going to screw up the name, but it's the SEC exemption that allowed very small companies like ours to do small stock subscriptions. Okay. And we got really smart attorneys to make sure that everything was perfect. You don't want the Securities and Exchange people coming to your door, right?
Yeah.
So that was kind of where we started, and then we just kind of kept, as we needed some expansion, we would either sell a little more of the stock or we would borrow privately. We do a lot of private notes with people that we collateralize with the equipment. And it's on rates similar to a bank, and then that allows those partners to come in and be part of the Mother Road story.
Okay, I'm asking you this question because like whenever I had to interview like CEO, singer, baseball players and stuff, I always get like very interested when it comes to the beginning of everything, you know. And a couple of weeks ago, I had to interview one of my favorite singers because he's the one who said this quote that says, "Start with what you have and start where you are and start with what you have." So that's what I was asking you this question.
Oh, absolutely. I mean, there was leftover appraisal computers from the old business. There was a telephone system. Of course, we used those. The first office was in my bedroom, and then we slowly expanded, and it really is exactly. You start with what you have, and then you go from there. And I love that. That's the. This is going to sound horrible, and my shareholders are going to scream at me later. But it's more fun starting a company at the beginning than it is running one. Running one is so much harder. Because once you get all of that art and the beauty and everything set and the culture set at the beginning, now you're in a maintain mode, you're in or growth mode like we are right now. Mm-hmm. But you've got solid products, you've got solid systems, and the beginning is so crazy and chaotic and fun. Mm-hmm. It's fun now too, but it's a different sort of fun. It's a much more standardized with SOPs and that sort of thing fun.
Yeah, because if you're the one who started a company, you can see the growth probably from 1 to 10, rather than if you are running a company that was already established, you can probably see a growth from 10 to 11, from 11 to 12. So
it's a little more gradual now, whereas we made big leaps.
Yeah.
And we still made big leaps. We actually made the Inc. 5,000 list this year, which was very exciting for us, with 45% growth, and we were really excited about that.
Nice.
There are still those leaps, but they're different kinds of leaps. So it's just different.
You mentioned a while ago that your grandma gave you a loan, $50,000 for 7% of equity.
Yeah. No, for at 7% interest.
Oh, 7% interest. I thought that she was like one of the first investors in the company, so it was the interest.
It was, so that was a loan, and she said she wanted to have a little higher interest so she could spend it before she passed. And so that was kind of the way we ended up paying off most of it before she passed, and then when my mom inherited everything, she forgave the last little bit of the loan, so that was pretty cool.
I thought that she had gave you the loan, just you were her grandson. I was like, I'll give you $50,000, just give me 7% of your company. I thought that it was something like that, so it was the interest rate then, okay.
Well, and it's interesting you say that because one of the tanks is named after my grandmother, Beverly Marquess. One of the other tanks is the Eva Janetsky, because she allowed us to use the collateral for the SBA loan of a fourplex that she owned. So she did end up getting stock for the use of that collateral.
Have you made business with your family, with your, an aunt, a brother, sister? Because I like to ask this question because it's many people say that whenever you do business, don't do business with your family. So I just want to know your perspective.
Actually, some of the family was shareholders at one point. They sold back shares when they had appreciated and sold them back to the company.
Okay.
Everything I did with family was very contractual.
Okay.
Just to be absolutely certain, because you're right. You don't want to ruin a family relationship, and that's why we had very good attorneys drawing everything up. I mean, do you want to go home at Christmas and have?
Yeah, right.
It's bad enough to argue over politics or religion when you get home, but you really don't want to argue about business. So one less thing off the table to worry about, right?
And how has it been for you right now that you're very established, your company is very established, you have financial stability and everything? How does it feel having a startup from scratch and now being top 3 in Arizona?
It's good, but we're never financially stable. Because we're growing, we're continuing to burn cash and reinvest, and that's the exciting part. We're investing $350,000 into a new packaging line and conveyance. And we're doing that in what's probably an economic downturn, but it's good for the company long term. It's good for our consumers and our guests that we're going to have perfect cans, perfect fills. So No, it's I wish I could say that we're financially stable and we're rolling in cash and everybody's doing backflips, but we've been pretty much for 10 years in growth mode. So we're just driving all that cash right back into the company.
With this new packaging thing that you're saying, you're investing $350,000. You're the one who has the final word, I assume. But like, do you have any advisors or people who are going to make this decision with you? Or let's say that they say, "Oh, we don't want to," but you're like, "No, but I think this is gonna work." How do you manage this?
Lucky for me, I have a board of directors.
Okay.
So we have 4 directors on the board. I'm one of them as the chair of the board, and I do have the majority shareholding at 52.5% of the company.
You have 52?
Correct.
Okay.
So I do have controlling interest in the company, but 3 of the other shareholders sit on the board. One of them is a major shareholder in the company, and the other 2 are minority shareholders. Very smart people. One is a 35-year veteran of Gore, W.L. Gore and Associates as an attorney.
Okay.
Wicked smart, just absolutely thoughtful. Sometimes we'll come back days later and say, "I've really been thinking about this more." And I love people that will give it that thought. We've got another guy that's been in financial services and is a retired colonel and brings a whole different, with the military background from the Air Force, brings a whole different, just like, nope, this is the way it is. If they're not doing it, they're gone. They're just not part of us, right? They're not part of a cohesive unit. And he's excellent for those. And our last one is just a serial entrepreneur. He's got his fingers in everything from property and real estate to autos to stocks and bonds. He's a lot of fun because he gets the entrepreneurial spirit of Mother Road, but he's also a beer guy and he gets the community of beer. And that brings a lot to the table because he's always looking at it. What is the consumer going to think? Because sometimes you get very clinical in a boardroom because you're really playing to, okay, what's best for the company, what's best for our employees and the shareholders. And those are a lot of your primary things. And he will bring in what is good for our guests and our consumers. And that's always a nice backdrop to have that part of the discussion.
That's interesting. So would you ever think, or let's say it again, have you ever thought about giving 2 or 3% more of your company now that you are in 52%, or you will always try to be above 50%?
That's a technical question and a philosophical question. So, and a legal question. So the technical question is, I can't go below 50% because of the SBA loans. I am a personal guarantee on all those loans. They have my house as collateral. I've signed a personal guarantee on all that. So I can't go below there. The second is I like control. I'm a control freak. I did a deal with a restaurant with some other folks where it was 50-50, but they were the controlling partners. And it didn't work for me. It didn't work for them either. We weren't a good match. They're great folk, but we had 2 different ideas, right? So that's important to me as well, is to have that control. I have never exercised that control. We have always, every year we have an annual meeting of the shareholders. There's been very few issues over time that have ever caused trouble. The shareholders are pretty good. They ask good questions. But just in case, I like to have that. But lastly, it's also an interesting thing because I've considered, do I put some of my shares into, say, a long-term employee stock ownership program? And unfortunately, my co-founder and I divorced. And so there's some interesting legalities with our divorce decree and her beneficiary portion if the company ever does sell. So it's complicated.
I mean, from what you're saying, sounds complicated.
How's that? It's complicated, but that's business. When you start a small business as an entrepreneur, at least me, I would never have seen all these outcomes. Now, as I start new companies, oh, absolutely, I'm looking at all those outcomes on everything from tax liabilities to control to how does this impact my family.
Yeah, you want to set the standard higher, right?
Correct. Well, you always want to do better on the next one. And so that's what we're working on, is always doing better on the next one.
And you, as a person who is the owner, the founder, you control the company, how would you say that people perceive you within the company, like when it comes to authority and leadership? Because I would say some people can perceive you as an authority, but other people can see you as a leader, probably both.
Boy, you'd have to ask the crew that. Depends on the day. Because some days, I'm not on the floor every day. I mean, I walk the floor and say hello to everyone, but I'm not working the pack line.
Yeah.
I'm not brewing the beer anymore. Those things went away a long time ago. So a lot of times where my leadership is hitting is directly with the upper middle management team.
Okay.
And that's been a hard thing for me, because I really have a very loose leadership style. I expect when we tell people about our strategic plan and here's our vision and goals and this is where we're heading, I usually expect them that when we do a project, I say, "Yep, let's go. You got it?" And they say, "I got it." And then I want to let them go get it. As we've gotten more and more complex, we found some people on our team are able to work that way, which I love, and they make my life super easy. Others need a little more coaching and counseling and following up, whether it's when you talk about leading, it's kind of that sometimes you're leading from the front and you're commanding and you're charging with them. Sometimes you're in the middle, and sometimes you're at the back of the pack and you're having to just push them forward. And that has been it's something I'm still learning on how to work with. Because in the early days, it was all of us understood what the problem was, because it was, we're going to get this beer out or the paychecks aren't going to cash. I mean, there were days where we would hold paychecks on a Friday until, we got like the first couple hours of Friday's tap room receipts in, and we would run to the bank at 6 o'clock, like 5:55, put the cash in so the payroll would clear. I mean, it was very difficult in those early days. And so everyone knew it was difficult. I mean, everyone was in on it. And so that early crew, we all worked as one. Because, I was on the floor doing everything with them. And that's been the hardest change for me, is to step away from all of that, but also to still be kind of doing that coaching and counseling, but just doing it at a different level, and then letting our managers go down and coach and counsel to everyone that's either on the floor in the tap room or working out there.
Okay.
Uh-oh, we doing okay?
Yeah. Moving more like into other technical questions. No, I just need to cut and then play again.
I don't know.
That's just what I did. And so more technical questions, like when it comes to investments, how big were your first big investments? Because, for example, like I visited your company like 4 or 5 days ago, and when I saw like everything, I was like, this costs a lot, like the huge tanks, all the like the technology, the technical stuff, like to make everything happen.
So, let me tell you that the first loan was $50,000. The first bank loan was $285,000.
Okay.
So fairly small now, and that $285,000 was enough to almost build a whole brewery 11 years ago. And now I just told you that we're spending $350,000 on a filling line, and it's a small filling line. I mean, we could spend millions at the rate with tech. And then it was investors, and the first investors, they came on. It was blocks. It was blocks of 10 shares at $500 a share, and there were only 1,000 shares back then.
Okay.
So think about that. There were 525 shares that reserved, and then the other, 475 or whatever it was, those were sold.
Okay.
And I think it was the first 2 investors. One did $20,000. And one did $40,000, and I couldn't believe it. I mean, and I'll tell you about the first one, because that was the fun, remember I told you that there were two people we were writing the business plan for?
Yeah. Like two audiences, right?
Two audiences. So I get ready for this first pitch. This was my first live pitch.
Mm-hmm.
And I show up at this house in town, a very nice house up on Cherry Hill. And out of the blue, they had just called us because they saw an ad in Flag Live that said, it was on the little map for downtown businesses saying coming soon. So they called and they said, well, are you doing investment? I said, well, yes.
Mm-hmm.
So I spent 2 days prior with my co-founder tabbing the binder. So every page in the business plan was tabbed up. Everything below was tabbed up in a binder with all of our assumptions. Every single thing I had an answer for everything.
Okay.
I show up to this gentleman's house who ended up becoming my mentor and still is my mentor and is the only other living guy having a name on a tank at Mother Road right now.
Okay.
And
what's his name?
It's Tom Gregory.
Shout out to him.
Absolutely. One of the smartest guys I know. His whole family, actually. His wife is amazing. His kids are amazing. Like, they're all like smart, savvy business people. And I show up, and it's his son, who's a professor down at the Frankie School, still is. And
do I know him?
I don't know. Professor Gregory?
Gregory Stuck?
Now I'm gonna have to think. Which Sean? No, Sean's out.
Does he teach management?
I don't know what he teaches. I just see him having a beer. I know he's in a band. I see him in the band or having a beer. I've never seen him in class.
Yeah.
So.
I don't know then.
But Professor Gregory, we'll go with that.
Okay.
But one of the fun things was we sat there talking for a half hour about life and about cars and motoring, and we talked a little bit about different beers and companies and things. And I kind of glanced down at my watch, and we're half hour, 35 minutes in. They haven't asked me a single thing about the business plan. And I'm still nervous. I'm still staring at my binder with all of its tabs. I'm just ready to go. And I finally said, did you want to discuss the business plan or anything?
After a while.
And they said, no, we thought the business plan was beautiful. It was perfect. It was well thought out. We see exactly what you intend to do. They said, we're really investing in you, and we're trying to feel you out.
Yeah.
And I had never considered that. I thought it was, we're going to make a beautiful beer, we're going to sell it, and people are going to buy it because it's amazing.
Yeah.
I had no clue that it was going to be so much on relationships and learning, and every day we learn one more thing, and we shake our heads and we're like, how did we go 11 years and not know this yet? So yeah, that was my big lesson on investment. And that first big check that came in, it was like, wow. Yeah. And at first I was like excited. I'm like, oh my God, we can buy the next piece of equipment. We can start doing this. We can get the design people going. And then all of a sudden there was this like iciness and heaviness in my heart that I'm like, I have a responsibility now not to screw it up. I mean, it's one thing not to screw up for the bank and not to screw up for your family and lose your house. But when someone entrusts you with a check that is their hard-earned money, that is a responsibility. And I would say that has been the hardest thing of being a CEO is trying to make the right decisions that aren't going to put your crew out of work or blow your investors' money because you were always trying to make those right decisions.
That's so cool that you're saying this, because like before starting the podcast, I told you asked me like, how was your weekend or how was your day? And I was like, yesterday I went to bed like at 1 a.m. because I was studying for an exam that I had like in a couple hours with Len, my professor that you know. And then it's like, I had the responsibility because like Len was in my podcast, Len helped me with a recommendation letter. He has helped me a lot like in this semester. And right now it's like, I need to do so well in his exam, because he's like, if you're listening to this.
you don't want to let him down.
Exactly.
And I think it goes back to Ben Franklin, and I'm gonna paraphrase and not say it as good as he did, but if you want someone to be in your debt, do them a favor, because it ends up, they've done me a favor now by investing, and I am now it's like I want to do so well now, even though they're going to get, hopefully, a payout someday.
Yeah.
Whether that be an appreciation of the company, dividends, maybe we sell someday. But it is a really big responsibility.
Yeah.
And that's been harder, that's been the hardest thing is you're always, I think I told you guys when you were in our conversatory, which we use as a boardroom, you're always looking at the people on the wall and thinking, okay, are we making the right decisions?
And what you were saying about like that person who invested on you, literally this morning I was watching an interview of two sharks from Shark Tank, and in Shark Tank Mexico actually, and Marcus was telling Ale like an anecdote about how everything started and stuff, and they were saying that, I don't remember how it was. Oh yeah, when they are in the program and the entrepreneurs show up, and then whenever they are like pitching, they are like thinking about investing. So if it's a good product or service, they're like, okay, so that's pretty cool, but at the end of the day, I'm going to be investing on the entrepreneur. If the entrepreneur is great and they don't have a nice product, it's fine. They can have a different product that is going to work because they are great. So they are trying to invest more in the entrepreneurs rather than investing in a great product with a bad entrepreneur or with a lazy entrepreneur,
And that is the hard part, right? I mean, anyone can have a good product, but can you actually execute? I mean, you can have a great idea, right? It's easy to have a good idea.
Yeah.
It is really difficult to execute it and then take it all the way through.
How would you describe your work ethic?
Spastic. I mean, I love to work. I'm always thinking about the company. I'm always working at home.
Yeah.
My kids get mad at me sometimes. They're like, "Go get off the computer. Let's do dinner. Let's go do something fun. Let's go do a ride." I'm like, "Okay." So I like the flexibility though of entrepreneurship. I mean, I can just pencil us. Here we are talking on a Tuesday afternoon. This is perfect, and I can schedule that in, and I have all the freedom in the world, and yet I have no freedom in the world because at the end of the day, I still have to get everything done that I must do as a CEO of the company.
Yeah.
And so it just means my work is sometimes early in the morning, sometimes late at night, sometimes it's midday, sometimes I goof off midday. It's a beautiful thing.
When we were talking the other day in your company, you said that people who talk about having a balanced life, like that bullshit or something like that, right?
It's
and
true.
It's like I completely agree with you because it's like you can have a balance in your life, like never. For example, like right now, I put like 70% of my day between work and school, probably 20% of my day like probably workout, baseball, having fun, eating, whatever, and then 10% or 5% like family time. Is like I'm an international student, so sometimes I call my grandparents, my parents, or just like friends from back home, and it's like probably, I don't know, in 10 years probably I'm gonna get married, I'm gonna have kids, so probably it's gonna be like 25% family time, and then it's gonna be like 40% work. So it's like there's not like a proportional balance. You're like in different stages of your life, you gotta put more work or more time in this case in different areas, right? How's that for you?
Oh yeah, because the early days, I mean, we would pull 12, 14, 16, 18-hour days depending on what was needed. There was a night where it almost broke me because it was 2:30 in the morning and the filter had clogged once again. We had this nasty plate and frame filter. It was a miserable piece of equipment, but it's what we could do back then.
Yeah.
And it clogged for the last time. And I just sat down in the middle of the brew floor. I was the only one there at 2:30 in the morning and just started crying, going, "What am I doing here? Why are we doing this?" And there were a lot of those long days. They're still long days, but they're different now. I don't pull those 80-hour weeks anymore because I don't have to.
80 hours a week, wow.
I don't have to because there's a great crew that is helping me manage the company now. There's great employees that are brewing magnificent beer. They're packaging it. They're serving our guests at the tap room. And they're doing it all better than we ever did in those early days because we've brought that level up. So now I probably do 50 to 55 hours a week on a typical week.
Okay.
And that feels good. And then there's other side projects I work on that are, other fun companies that we're playing with. And
so at the beginning you were doing like everything, and then you're starting like obviously having more employees, the crew, like people who would support you in your company. How easy or how hard was it for you to start delegating and giving control to other people?
I'm still working on that.
Is it hard?
It is. We came up with a 70% rule for this very reason.
Okay.
If someone can do it to 70% of how I would do it, I need to shut the hell up and let it go.
Okay.
And let them do their job. And I'm gonna pick on our taproom manager Dylan because he's a good guy. I was probably over micromanaging because the taproom and hospitality is my love. It's my first love. It's the part of the business I truly, truly enjoy.
Okay.
I love delighting guests and providing radical hospitality.
Yeah.
But
Part of your major, right?
But it was. So, and what was happening is I was kind of smothering him. And so as I've stepped away more and more, he's now running it as his own company. And it's still a division within the overall brewery, but it is its own LLC. So he has his own income statement and balance sheet every month and cash flows. And now he's running it, and I'm letting him run it a little more. Do I still have ideas from time to time? Sure, of course, but we discuss them. And it's been fun. He'll come to me and say, well, what about this? And I said, well, it's your baby. Is it within our, we call it keeping it between the ditches.
Yeah.
Is it between the ditches? Is it something you have the money for? Then you answer your own question, right? And that's been hard to let go. But conversely, there's been times where I've let go too much, and then things will slide. We've been kind of adjusting on the brew team right now because costs have gotten they've increased so much over the last year that we're really having to be as tight as we can on that team, whether it's labor hours or waste. And so I've really had to refocus and become more involved on that team because it really does need all of us going in one direction to make sure we're controlling costs and putting out perfect beer.
When it comes to like dealing with your employees, dealing with salaries, wages, all of this, how do you determine how much an employee should earn, and how do you determine when a raise, how do you say, like when you increase the...
Yeah, like a raise.
Yeah, like a raise, How do you determine when it's appropriate or not?
We have actual standards about this. We use a company, I think it's PayScale, and we use them to look at salary ranges for managers, and so we're comparing manufacturing employees like against Joy Cone Company, other breweries, Gore, Purina. So we're looking at, okay, where are we in that spread across flag? Then we're also looking at where are benefits. We offer healthcare, medical, dental. We have a 401k with a 3.5% match. We have first year people get 3 weeks of PTO.
What's PTO?
Paid time off.
Okay.
Plus there's 9 holidays a year that we pay.
Okay.
So we're fairly generous with our, at least I feel we're generous.
Yeah, sounds like it.
The crew seems to be mostly happy with the annual survey, so that's good, right?
Okay.
So that's the first half. That's how we determine the how much. And we did have to bump some people this year with inflation. We did and across the board on our brew team to make sure they were coming up because things cost more.
Okay.
As far as when we give raises, we have what we call the roadmap, which we invite all of our employees to go on, which is their kind of career path through Mother Road. Even if it doesn't end in Mother Road, we work on them with that. And then we have skill levels. So in the brew house, we have a brewer 1, we have a brewer 2, we have a brewer 3. Brewer 1's your entry level. When they achieve a certain level of skills or proficiencies, they get a raise and go to that next level. Okay. When they get proficiencies within that, they get a raise. So it's really, it's us having standards set that we want the employees to reach, but it's also the employees pushing themselves to grow themselves within the company using that roadmap program, but also making themselves more useful to Mother Road. And I love when our crew does things. We've had several of our best ideas have come out of our crew.
I know that measuring success is super important, measuring with numbers and everything. But what are some of the metrics that you use to measure success that have nothing to do with numbers?
Nothing to do with numbers. Cultural fit, I think, is a big one. When people can really demonstrate our values and they really live building community one pint at a time, that can be as important as performance sometimes. You know, when you see someone struggling and you go help a coworker out, or you know, you come to one of the meetings and you say, hey, by the way, I have this killer idea that would actually make this a better thing. So that's showing curiosity, which is one of our values. It's being dauntless by putting that out there, right? Those are things that are kind of the intangibles that aren't, you know, I didn't just do my 1,000 cases on my shift today that we got out and, you know, into the cooler and ready for the truck tomorrow. It's I'm doing what is good for Mother Road. Or they'll come and say, I read 3 articles on, you know, this particular yeast strain. Have we thought of trying it? Could we try it because it might do this for us? And those are where I think our employees just absolutely shine. When they come forward with those ideas and they've taken ownership in the company. As a matter of fact, I think sometimes I just get so humbled because there are times when the crew believes in the company as much as I do, if not more. And that's really humbling.
Yeah. When you have had to interview people to recruit them for your company, what are some of the questions that you ask them that are going to determine if they're going to be a fit or not?
Lucky for me, I don't do any of the hiring anymore.
But when you had to?
When I had to, we did situational questions. So it would be, tell me about a time that you did this. So like in hospitality, tell me about a time you delighted a guest.
Okay.
What was the situation and why was the guest delighted? And you can tell the people that know how to delight a guest because immediately their mind is going to go to, oh my God, yeah, last Christmas, you know, a plane was late and I was working at this hotel and they were snowbound and they didn't get to where they were going. And we all sat around the Christmas tree drinking cocoa and I made sandwiches at the end of the night because the kitchen was closed. You know, they're going to have a specific example. People that maybe don't know what we're trying to get to, well, we should always delight the guest because that's really good and it makes them like our property better. And, you know, they'll just kind of bullshit an answer.
Yeah.
When someone truly is a hospitality person, they're going to have an example of delighting a guest. When someone in the brew team truly loves beer and you ask some of those silly questions, do you have a favorite beer? You know, tell us about the best part of the last place you worked. And they just jump in and they've got all the reasons why they like that last place they worked, whether it was freedom to play with a recipe sometimes, or they want to tell you about their favorite beers they drank when they were touring Belgium or whatever. You know they're a real person.
Yeah.
You know, when someone just tries to tell you the beers that you brew, oh, those are my favorite beers. It's like, okay,
nice.
Thanks, but no, I really do want to know what your favorite beer is.
Yeah.
And that's when then we'll go situational, you know. What was your first beer that you really enjoyed? And then you start hearing more about where they're coming from.
Yeah.
So you're wanting to get a feel for the person and that they really actually understand the experience you're looking for. I mean, you know, tell me about a time a hose broke in the brew house. Someone that's worked in a brew house is really going to be able to tell you how messy that is, how dangerous it can be, and how to stop it quickly. Whereas someone else is just going to say, well, you know, we always keep our hoses in good repair and blah, blah, blah.
Yeah.
You're looking for genuine authenticity, I think, is where you're heading. Is you're trying to ask questions that are going to elicit an authentic response and allow you to have that person on your team.
That's cool, actually, because the other day in class, Len was saying that whenever he had to interview someone at FedEx, he was like throwing this question, and then let's say that the interviewee would say, oh yeah, so I consider myself very positive, very energetic, very whatever.
Yeah.
And then following question would be like, give me an example on how you have been positive, or and he was saying like, whenever you say something, you gotta back it up. And actually yesterday I was talking to Dr. Gilbert, one of my professors, and he was saying like everything because so he's coaching me and another student for a sales competition that we're going to have like in 1 month from now, literally 1 month from now. And he said everything that you're going to say has to be back up with qualitative and quantitative data. And that's pretty cool because it's not only in business. I think it's like everywhere. Whenever you say something, you gotta back it up, because if not, you're gonna be just like someone who's gonna be talking bullshit, right?
Well, as entrepreneurs, if we're expecting people to either invest in us, or if we're expecting a distributor to pick up our products, we got to walk the walk, talk the talk, and they've got to match. I wish it was that way with politicians right now, because you can go out and say almost anything and have screaming masses on one side or the other backing you up. Boy, if they had to earn money instead of print it, and actually back up what they say with facts and actions, wouldn't we be in a wonderful place? If they had to behave like entrepreneurs and business people, this would be a whole different country right now, instead of people yelling and shouting at each other.
Tell me about Mexico, huh?
Oh boy.
The other day, like you were mentioning that you had a situation, like a bad experience when you were trying to launch a couple products in New Mexico. Can you tell me about that experience?
Oh boy. I think the biggest thing is we weren't ready. We didn't know.
Can you approach more just for the camera?
Oh, sorry, am I
right
sneaking?
Right there, yeah.
See, I'm sneaking. See, it's so comfy. You don't give the guy the comfy chair. I'm just going to take a nap here and enjoy, right? No, New Mexico, we went into it and we weren't ready. That was the long and the short. We were working with a distributor that didn't know what to do with Mother Road, because we weren't local, like in the backyard where everybody knew the beer and loved it. But we weren't a big company coming from out of state like a Founders or a Victory. So we had no home court advantage, but we weren't big enough to have that huge advantage. And myself personally, I didn't know how to lay that out. And it ended up being doubly a fail, because we had to sell for cheaper out there, because the economy in New Mexico is less. So beers actually sold almost 25% less.
So your margins were lower.
So the margins were bad, plus we had to truck it out, plus we had to then run sales teams out. We weren't ready. We just weren't ready to make that investment. The distribution company was good, and they really did best efforts to work with us. It really was us. We weren't prepared, because we have a distributor here in Arizona, Hensley Beverage Company, that treats us very well. And we have the home court advantage. Those things make it easy to sell beer in Arizona when you have a great distributor partner that is just crushing it. That makes it easy. So when we hit a place where we were having to do a lot more of the work, but we weren't knowledgeable on how to do a lot of that work, it was not a good idea.
What would you say that is a good margin for your products?
Right now,
like in percentage-wise?
At any margin right now is good. No. Typically, we like to keep a blended contribution margin of about 45%. I'd like it to be 50 and 55, but we've lost almost 10 points with increased costs in the last year in packaging materials, aluminum, increases in raw materials, barley. It's rough right now. So when you lose that margin, you're really having to now pinch labor hours, pinch every cost, make sure your waste is perfect, not ruin any batches of beer. It's really a difficult time. Brewers are struggling here in the U.S.
I don't remember where I heard this, probably like 1 or 2 weeks ago. If I heard or if I read it, that the inflation in Phoenix is above 10%, right? Was that true or no? I don't remember.
I remember someone telling me that it was higher in Arizona, because we're doing so well with everyone wanting to live here, the real estate, the healthcare, all of that stuff. I haven't seen that as a published fact, but I
Okay.
did remember.
But people
one of my
have been
business
talking about it, right?
associates had mentioned that. So I guess we'll have to look it up. We'll have to fact check ourselves.
Yeah. What else? Wait. Other thing is about where do you have presence right now? Like where does Mother Road Brewing have presence?
We're statewide in Arizona, so all the major grocery chains, Safeway, Albertsons, Fry's, Sprouts, Whole Foods, Trader Joe's, Bevmo's, Total Wines, all of those
Safeway, right?
chains, Safeway, yep, all of those.
Are you in Walmart too?
We are in Walmart.
Walmart?
Yeah.
Sprouts? What happened with that?
Yeah.
Okay, I'm asking you this question because people don't have any context, but you were going to pitch for Sprouts.
So we won't know the outcome of our pitch. So we pitched to Sprouts, and they're wonderful. They're a great account. We won't know until they release numbers in December or January for the spring resets. So that's why these reset meetings, we're doing Safeway and Albertsons, and then Kroger's coming up here pretty quick.
For Fry's?
For Fry's, it's a 15-minute pitch over Zoom with slides, so it's live and with slides with the buyer, and you pitch what you want to sell the next year, what your priorities are. You do a review of the year with what we've done with that particular account. And then your pins and needles in 15 minutes, and your performance of the last year is going to set up your next year, and you never know until spring.
Yeah, you're a private company, but for example, when it comes to these kind of pitches, do they ask you for your annual report, statements, and everything, or not?
No, but they are getting a lot pickier. We're now seeing, do you have a voluntary withdrawal from market plan? So basically a product recall would be the term you might know. Do you have one of those? What are your quality controls? So we're having to describe labs and things of that nature. What, looks like Walmart is going to come out with, we're going to have to get a scorecard on how far are our vendors from us? Where's our barley grown?
Okay.
Where are our hops grown? Where do we source our aluminum? So you're seeing a lot more conscientiousness from these major retailers, which I think is a good thing. I think they should consider those things. We consider them for our own sustainability. We can't always, we don't have barley fields. I mean, there's a little bit of barley grown south in the Verde Valley, but it's not enough for what we would need.
Okay.
So we do look for sourcing as local as possible. We do look for places that we want to do business with that make good sense, both sustainably and financially.
What are some of the places where you would like to have presence in the short term?
I would love to go into Southern Nevada and Southern California. It's a little selfish because who doesn't want to go out to the beach in LA when it's cold and snowy here, right?
And when it comes to stores?
Stores?
I mean, you're in pretty big stores right now.
Yeah, we're in most of the stores. I think I love the chain business because once you're in, it sells very well. You do, you keep meeting with the chains and things. The fun is going into a lot of the independents. I really love getting out to them because sometimes the owner that's selling your beer is the one manning the counter or is selling back at the bar, and it's always fun to talk to them and hear how they're experiencing your beer, how their guests are experiencing it, and getting their direct feedback. So I love some of those independents because that's a lot of fun to go visit with them and really hear, because they're right direct with the consumers. It's the same when we go talk to bartenders, and it's just a lot of fun to hear how people are experiencing.
Because they know everything like from first hand, right?
Usually, yeah. And they'll tell you exactly what they like and what they don't like. But we also like going out and we'll talk to the warehouse guys at Hensley and ask, hey, when stuff's coming down, how do you like it? How are you experiencing it? Because they're an internal customer. Because they're having to deal with our pallets, and we want to make their jobs easy so they like us as well. So there's so many layers of all of these. Okay. How we do the accounts.
How would you say that you conduct market analysis?
We use a lot of data sources. We use Nielsen and then our distributor uses IRI, and those are the two biggest scan datas.
Is it too difficult to hire them, or like super expensive to hire them?
You can hire them, but we're not big enough, really. So we looked at Nielsen doing one of their panels for us, and they're just, because we're only in Arizona, there's not a ton of data yet on it, on where we would fall in that. But the Nielsen data for craft beer is excellent.
Okay.
And we can look and see exactly where we rank. We can see what other beers rank. We can see where things are moving up and down in popularity. That's great data. And then you couple that with our craft consulting team, talking to our accounts, me getting out talking to our accounts. The best thing I can do is go out to lunch with someone that is running a resort, for instance, that has multiple outlets.
Okay.
And ask, how are we doing out here? What do we need to do better? What are we doing well?
Yeah, because you want to receive the real feedback, not like, oh, I love your company. No, you want people to tell you, you need to improve in this, and that, right?
And that's a lot of fun because that gives me ideas. Where are we heading with next beers? What beer that we don't brew are you really liking right now? And that's very useful.
Yeah.
Sometimes I'm a beer stalker. It's easier for me to do it in Phoenix than up here, but sometimes I'll go and I'll hang out in the beer aisle for 15, 20 minutes watching what people grab. If someone looks like, they're really making a hard decision, I'll walk up after they grab whatever it is, and I'll say, why did you pick that beer? I'm looking for a beer today, and just kind of play
because
it
they don't
out.
know who you are, right?
They don't know who I am. And it's always fun to hear why a particular consumer picked that beer, especially when you watch them hovering over the different beers. I think that's it's so much fun. Again, it's all anecdotal. It was the time of day I was there. It was that store. It's a good compliment to having the Nielsen data and going through all of that.
You're number 3 in Arizona right now. What is the market share that you're looking for?
We would like, so they measure by all commodity volume, which
Okay.
is, if you were at 100%, you would be in every store that could possibly sell beer. So right now we're in the mid 60s, and
So 60% of market share.
not market share.
Okay.
60% of all commodity volume. So
Okay,
we're
okay,
in
okay.
60% of the stores that we could possibly be in.
Oh, yeah.
I would like to get us up to that 85%.
Okay.
88%. That when you start hitting 90%, you're a very mature company, and so that means we need to continue to diversify our offerings, our packages, package sizes, and to get those into the different markets. Grocery is doing very well. We need to work on our C stores, which is our convenience, gas stations, those sorts of places.
Are you in gas stations right now?
We are. We're in some. We're pushing Circle K's, for instance. There's a good target. You asked me if there was a specific target.
Yeah.
I would love to be in a lot more Circle K's.
Circle K's.
Circle K's sell a ton of beer. There are people going in there after work, grabbing that thing of beer and going home. It'd be a great place for Mother Road to be.
And you said that also all of these stores provide you with data, right? And you gotta pay them for them to give you the data.
We use the Nielsen data.
Okay.
Stores typically don't share internal data because that would obviously compromise some of their proprietary how they sell. So we don't usually get it from there, but we'll get anecdotal data. So sometimes we'll be in a pitch and someone will say, "Oh, you're our number 1 SKU." And that's very cool to hear.
Before launching a product, what are some of the most important things that you need to consider?
Ooh, boy, product launches.
You just launched one, right? The one that we tried the other day.
Correct. Well, it's in beta testing, I guess you'd say.
Okay.
The Roadside Grove Tower Station. Yeah, that was.
Yeah.
And obviously, you guys seem to like it, so that's always good. But to launch a beer anymore, it really is looking at all of that market data from Nielsen, what's competing, what is on the shelf right now that looks like what you're wanting to do, or if you're going for it and there's nothing out there, you may want to look around and say, why is there nothing like what we're trying to launch out there? Because either you're just going to be the innovator, or you're going to fall flat on your face.
Yeah. How long has it taken you so far to make your company profitable? It's probably the first years were hard, and right now you're more established, right?
I don't think we turned a profit until operational profit. I'm gonna separate the two.
Okay.
EBITDA, operational profit, if you will, I think was in year 6.
Okay.
Might have been. It was year 5, 6, or 7. I would have to look back.
Okay.
Because that's actually when I got a tattoo of Prometheus. I said when we turned profitable, we would get that.
Okay.
Net profitability, we take advantage because we keep investing in new equipment. We're using depreciation. We've got very good CPAs, so we're pushing that net profit down with depreciation because we keep buying more equipment.
How expensive are the huge tanks, like the container that you had in the company?
They can be $40,000, $50,000 a tank. So actually not a lot.
Not crazy, right?
No, because the street value of a barrel of beer is about $335.
Okay.
So when we sell it wholesale, that's about on average what we're looking at out there. So if you take a 100-barrel fermenter, 1 turn of that is about $30,000 of revenue. Okay. And then when you put the margins on it, you can pay off a tank fairly rapidly.
And how do you reinvest in your company? Like whenever you get like this profit or revenue, and then you reinvest this profit, how do you do it, or where?
It really depends. So, for instance, during COVID 2 years ago, we made a major investment back into our hospitality side because that tap room was showing awful age. The restrooms there was 2 single toilet restrooms.
Okay.
And no one wants to be 12 deep in line for the restroom doing the potty dance on a Saturday night. It's just, that's not radical hospitality. So it was time for us to reinvest in the experience of Mother Road. So that was a major one, and that was driven by our guests, but also just by our hospitality, by our value of radical hospitality. We were not providing that. Other things, it comes down to quality, speed, efficiency. Our new canning line will do twice the number of cans. Okay. So we'll be canning half as much now for the same amount. And
the more you produce, like the cost goes lower, right?
Correct, but also it's higher quality. We know this is a new machine. It has newer tech on it. It's going to do better, which is going to produce a better product for our guests and our consumer when they have a can of Mother Road. We have a new keg washer filler coming. That is an investment because it's going to make a better washed keg than the machine we're using now. So, they're all sanitary, but there's even more that you can do. And it's going to fill it after it washes it, which means quicker, speedier. We want really good, highly paid, trained operators of our machines. I want to pay a crew really well. And by investing in tech that can work with them, that's a good use of crew. Paying someone just to pull boxes off the end of the line and pack a pallet, that's not terribly fulfilling or challenging or fun. And I'd rather, if we can get rid of those not fulfilling jobs and get our crew working the really fun ones and get them on that roadmap to where they keep reinvesting in themselves, that's going to be awesome.
That's true. You feel like, you seem like very relaxed, you know everything about your company, but how do you handle the stress in situations when you thought that you were going to succeed, but then you fail?
Did I mention we make alcohol?
Right.
No,
like you said, like R&D, research and development, or research or drinking?
No,
research and drinking.
Development. No, actually, the biggest thing for me has been jiu-jitsu. And doing jiu-jitsu and then going to a strength gym. Those two things, they get you out of your mind. If someone is trying to break your arm or choke you so you can't breathe or have blood to your head, you don't have a lot of time to get into self-reflection and all of that stuff in your head that can make you, I would say, not a good leader. And it gives you that break, and that's what you need, is that break. Also, having kids and dogs, it's really hard to take yourself seriously when you come home to either a messy house or the dog has chewed something up. Your kids have homework you got to do. You got to do the lunch thing and all that. it's really hard to, again, be in your own head and get all crazy about work.
Because they don't see you as a CEO or as a businessman. They see you as their father, right?
They call me Papa. So I think you can get into your own head too much. And I don't want to do that. I mean, it is a very serious job. There's the employees, there's the shareholders, there's the banks, there's a lot of people really wanting me to make good decisions, make our board to make good decisions, our managers to make good decisions. But at a certain point, you have to trust that your crew is going to do those good things and they're going to make right decisions. Whether they're at the tap room, whether they're on the canning line, wherever they're at in our crew here, that they're going to do the right thing. And that's what I trust. And so I don't have to worry about all of that down to that level because I know our crew is trying to do the best they can do every day and make the right decisions. And so I have less to worry about with that. And does it do any good to worry about inflation? I don't control inflation.
Exactly.
I don't control, who's going to be in charge of city government or federal government this next year. I'm going to go vote. I'm going to hope for who I like, but at the end of the day, I really can't control that. So I try to just keep my mind. I love the Stoics, so I try to practice that I only can control what I can control, and the rest I just need to let go.
Well, Michael, thank you so much again, for being in this podcast. I really appreciate it. You know a lot about your company. I mean, obviously you would, right?
Most days. Some of this new equipment I'm going to be absolutely puzzled on because there's crew that knows it so much better.
But that means that your company is growing, right?
It does. No.
Well, so before finishing the episode, I want to do what I always do with my guests. So at the end of the episode, what I do is so I already asked you a lot of questions, so now is your time to ask me 2 or 3 questions about whatever. And if a previous guest already asked me these questions, I'm gonna ask you to ask me another one.
Okay. So here's the curiosity. Why did you want to start a podcast?
I think they already asked me this question, but I'm gonna answer it.
Okay.
So it was back in 2019 when I was listening to Roro Chavez. He's one of my favorite podcasters. He's an influencer back in Monterrey, Mexico, and I really admire him not only as a content creator but also as a person, super genuine, trying to always help people. And at some point, I was so I published my book in 2018, and I was just selling it, giving conferences and stuff. And then I was I want to do something more, because I got super tired of my book and its content because it's I'm always talking about the same thing. So then I was I'm going to start a podcast and I'm going to start talking about my experiences as an international student, what I learned, wherever I go, I'm going to share something, And then I did it for a year. It was in 2020 when I started, and I did 35 or 38 episodes. Then I came to NAU as a transfer student, and then I was now I think that I want to do something more. So I want to try to invite people that I admire, people that I can learn from, and then as a consequence, my audience will learn even more, So I started bringing people that I admire, a couple friends, and then at some point it's I want to start reaching to people that I always wanted to talk to them. So I interviewed 3 professional baseball players. So far it's been 4, and it's I can't believe that I'm talking to them because I grew up admiring them, watching them playing baseball on TV, going to the stadium.
That's super cool.
Having the opportunity to talk to them is super fulfilling. And then, as I was telling you, 2 weeks ago, I talked to Emmanuel Espinosa. He's a singer of this band called Rojo. And when I was 7 years old, I remember that I told myself, one day I want to talk to him. And 2 weeks ago when I was recording to him, I was I can't believe that it took me 15 years and now I'm talking to him. So it's just very fulfilling, talking to people that I admire. Right now, everything that I learned with you. Also, when I interview Lenjo Stetter, my old professor Paul Thomas, and then CEOs of other companies. So it's very fulfilling having the opportunity to talk to all of you.
Oh no, I had to follow Paul Thomas. Man, that's tough. That's tough to follow.
What do you mean?
I know Paul.
You know Paul?
He's a great guy.
Yeah. So yeah.
So what's the most surprising thing you've learned from one of your guests?
Interesting. Let me think. Last month, I interviewed Luis Alfonso Cruz. He was he's still a professional baseball player in Mexico, and he was in the majors with the Dodgers and with the Yankees. And something that he said was that, because I asked him, how was it for you when you were playing with the Yankees? I mean, he was playing shortstop when Derek Jeter was injured. I think it was back in 2013.
Oh, wow.
And he was with the Yankees for 2 months, and he was literally in the same plane as CC Sabathia, Andy Pettitte, Jeter, Robinson Cano, all of these big guys that are like all-stars, literally. And he was like, I didn't realize that I was living this because I was really focused on doing my work. I was doing like everything to be like, imagine being the substitute of Derek Jeter. Shouldn't be easy, right?
Yeah.
And then...
Big shoes.
Exactly. And then that happened, and then he was like, when people would ask him, and I also asked him this question, how was it for you? Like, I mean, you were living the dream of like all of us. And then he's like, I didn't even think about it because I didn't realize what I was living, because he said like his agent called him, because he was in another team, I don't remember which team, and he was saying like, my agent called me, I was in Disneyland with my kids, and then he's like, you feel comfortable playing shortstop? And then he's like, yeah, you want to play tomorrow with the Yankees? And he's like, yeah. But he thought that it was in the minors, not in the big leagues. And he's like, you mean in the minors? No, you're going tomorrow to the big leagues. And he's like, okay. So he finished the day in Disneyland with his kids, went back to the hotel with his wife, and then they traveled to, it was in Minnesota. And yeah, so he showed up to the literally following morning, and then he arrived. He said like, it was super fancy when the limousine picked him up. He was in the stadium, and then Joe Girardi was the manager, and he's like, hey guys, so you're hitting second, you're playing shortstop, and then we're gonna talk more after the game, because they were on a rush. Yeah. And then he's like, so what I learned, going back to your question, is that sometimes you're living super fast your life, you're learning a lot, you're improving, you're like doing literally the stuff that you're supposed to, but then you don't realize. And then I think that at some point it has happened to me, because yesterday I was watching some pictures about my summer vacation, and it's like, it's been only like 2 months, and I think that this semester has taken forever, because every day is like something new, and I really enjoy it. It's not I'm not complaining or anything, but it's just like, that would be nice if I take more time to enjoy or to appreciate more. And for me personally, being a student in the US was a dream that I had since when I was probably 15, 16. But like, since I was a child, it was like, oh, going to the US, it's amazing, but actually like living there, not only going as a tourist. Mm-hmm. And then right now, when I think back, it's like, I have been here for 5 years. I'm about to graduate in December. So for me, it's very, very fulfilling understanding everything that happened behind the scenes, because it's like, I need to appreciate more that I'm accomplishing my dream, you know?
It's really cool.
Uh-huh.
So how do you stop every day and look around to recognize where you're at?
It doesn't happen every day, if I'm honest with you, but some days, like, I try to wake up like every day, like 5:15, 5:30 a.m. I work out from 6 to 7:30 a.m. And then sometimes when I'm walking or when I'm in my bike, literally I'm smiling, because it's like, can't believe that I dream with this, you know? It doesn't happen every day, but sometimes I take the time to appreciate it. Or also something that I do, because sometimes it's very hard to wake up in the morning, and I play music that I used to play when I was dreaming about coming to the US. So I think back, and it's like, hey, so I used to listen to this music when I was running in my neighborhood, but I was imagining myself running in a university. So it's like a good way to associate it.
That's really cool.
Yeah. Any other question?
Jeez, I don't know. So I would have prepped better, I tell you. Is there, in all of these interviews, is there anything that came up that you ever said, that's crazy? Like, absolutely, you're just like, no way.
Let me think. I always bring this one, Paul Thomas.
Yeah.
Because, like, the thing is that some of the stuff that he said in the podcast, he had already said it to me, like, in class, you know? Mm-hmm. Because I used to go with him after class just to ask him random questions. It's like, he's so interesting. I want to ask him, like, do you ever work with Steve Jobs or stuff like that? And he actually did, you know? He got to meet him. And something that he said in the podcast that was, like, incredible, I would say, is like, oh, yeah, yesterday the president of PlayStation Group called me because he wanted to have dinner with me, so I went with him tomorrow. So I traveled from here to Japan. And I was like, no way. So he literally just flew overnight, had dinner with him, and then he came back to the US. So that was some of the things that I was shocked.
That's pretty crazy.
Another thing, let me think about other guests. The CEO of Cafenio is like one of the big competitors of Starbucks in Mexico, in the north. And he was saying that he's not the one who started a company, but his grandpa started. And then he grew up in the plant and everything he was seeing. So then right now he's not a CEO anymore. I think he quitted last year. He's the mentor and all of this. But he was mentioning something very important when I asked him how important is for you to understand your competitors to make sure that you're gonna do well, right?
Yeah.
And he's like, well, I don't focus on my competitors, I focus on the customers, because if I focus on the customers, I can have more control. And because if you focus on the competitors, you're gonna be probably like trying to compete with something that it's already established rather than focus on the customers and then you're the one who's gonna establish something.
Right.
Yeah.
That's an important lesson.
It is.
And it's been a tough one. Sometimes our crew will get focused on a competing beer or brewery. And I'm like, yeah, but what are the bartenders asking for? What are the guests asking for? That's where we want to keep our eye on. You're not wrong.
It was a really good advice.
Yeah.
So literally that's, in going back to your other question, like one of the things or the thing that I enjoy the most about the podcast is learning from everyone that I interview. Because at the end of each episode, I'm like more energized, I'm more inspired, more motivated. So it's like, at some point, like part of my vision is like, so right now I'm the one who interview like successful people, but at some point it's like, I want to be one of them, you know?
So what's your big business plan?
I don't have a business plan because I don't even have a business. So once I graduate...
But what do you want to do? I mean, what is the big business you want to go into?
I would like to work with the Yankees or with ESPN. So I'm trying to build like this part of like... I'm trying to invest in myself right now, like reading books, like having the podcast for me is an investment because it's like talking to all of you. But like having a business plan, I don't have a business plan. It's just like I want to be more marketable. That's my goal, so I can have more opportunities.
There you go.
Trying to be different, you know.
Well, good luck with that. Yeah.
Thank you.
ESPN, Disney, that's a Mondo company now.
Yeah, that would be nice.
Well, remember all of us small people? You know, you can
come on.
you can invite us to dinner and fly us to Japan, right?
Yeah, that would be nice. We can bring Paul Thomas too. All right, for people who listen to this episode, like, please share it in your Instagram stories. You can find me as Luis Carlos Estrada and the number 2. And Michael, you want them to follow you or Mother Road?
Well, Mother Road Beer is all of the company handles, and I'm Travels with Natasha.
Okay.
Natasha being my 66 Mustang. So, yeah, I'm on Instagram, but not very much, so don't expect a ton.
Okay, so please go share it if you like it, and thank you again for staying until the end of this episode. It was a really nice conversation, Michael. Thank you again.
Thank you. Appreciate it.
That was cool.
That was fun.